Social Security, as many of you know, used to be tax-free. And then many years ago, a couple decades ago, they started taxing it. And they have this tiered system as to how much is taxed. And so there's this concept called provisional income. And provisional income is essentially your income, adjusted gross income, without Social Security, but then you add back in half of your Social Security. You also add in your interest, tax-free interest, and you get provisional income. Then you go to this chart here, and this chart shows that if you're single and your provisional income is under $25,000, you don't pay any taxes on Social Security. For married, it's $32,000. As you can see, there's a 50% bracket and an 85% bracket. So Joe, interestingly enough, if you can arrange your affairs somehow to have a lower provisional income, you pay less taxes on Social Security.
I mean, this is key. I mean, we look at your overall picture is key, right? When you're doing your own planning, you can't look at Social Security in a bubble. You can't look at your overall taxes in a bubble because they all kind of combine together. Tax diversification is critical. So how are you creating the income from your other assets is going to determine basically how much of your Social Security is going to be taxed. If you have a lot of money coming from Roth IRA distributions, that's not included in the provisional income calculation. If you're managing your taxable accounts in a way that you're tax loss harvesting and you're creating losses and gains and knocking those out by creating income at a tax-free rate, that's also not going to be included in your provisional income. So we've seen individuals and families that have a very high income that pay very little tax, if any, just because of how the planning that they set themselves up for when they do start claiming Social Security benefits, they know how Social Security is going to be taxed.
Yeah, and I think it's important to say, Joe, that many states don't tax Social Security either. In fact, currently it's 37 states out of 50 do not tax Social Security, California being one of them. But let's talk about how you can potentially reduce your provisional income so that less of your Social Security tax would be taxable. So one of the ways would be something called a qualified charitable distribution. And this is when you're over 70 and a half, actually now 72. You can do it at 70 and a half, but 72 is the required minimum distribution age. And so instead of having a required minimum distribution show up as income on page 1 of your 1040, you can actually send it directly to charity. Therefore, it doesn't show up as income. Joe, it doesn't affect your provisional income, and you could be in a lower bracket just from that strategy alone.
Yeah, QCDs are very useful in a lot of different areas, and I still think people underutilize them. Right, you're giving to charity, but you're still taking a required minimum distribution. That's showing up on your tax return and kind of jumbles things up. So if you understand how all of this coordinates together, it could save you quite a bit in taxes and still accomplish all your charitable giving, tax goals, and so on. So, we talked a little bit about tax loss harvesting, funding with Roth IRAs, and then Big Al, real estate. What do we do here?
I would say almost every real estate owner that I've talked to, and myself included, has some kind of deferred maintenance to do on their rental properties. And in a year when you're trying to create deductions, potentially you can do some of that deferred maintenance and potentially write it off as a maintenance expense and lower your rental income, your net rental income. If your total adjusted gross income is below $100,000, you can actually write off up to $25,000 of losses on rental real estate. So that's yet another way to reduce your adjusted gross income, which then reduces your provisional income.
If you want more information on this, you know where to go. Go to yourmoneyyourwealth.com. Click on that special offer. It's our Social Security handbook. yourmoneyyourwealth.com. Click on the special offer, yourmoneyyourwealth.com.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.